Hi, and welcome to the Stock Scores Market Minutes for October 3rd, 2016. This week I want to talk about the difference between market uncertainty and investor confidence. Price volatility, how much price moves up and down, demonstrates investor uncertainty. So if you have price kind of going like this and it goes all over the place, that is uncertainty. When you have a trend, you have investor confidence. And that trend can either be up or down. But as long as the range is relatively narrow in the trend, without a lot of jumping around, that shows confidence. If you have a trend that goes all like this and generally is going up, that is still uncertainty. So it's all about the narrowness of the trading range as time passes. That is confidence. When you have lots of volatility, that is uncertainty. And uncertainty comes from a lack of a strong opinion. That brings this random price volatility. It's kind of what we've had in the last couple of weeks. When you look at the chart of the S&P 500, you can see that we were in a relatively narrow range here, and even for most of the summer going back into July. And then we started to get really volatile here. The reason why was the market was starting to show concern about the raise of interest rates, possibly at the September meeting of the US Fed. And as a result, you had lots of volatility because investors were not confident, they were uncertain about what might happen in the future. And that is a difficult environment to trade in. What we want is a market where there is narrow trending volatility in some way. So here we had generally a nice trend, a little bit of volatility there and there, but for the most part, a pretty good narrow volatility trend. But look at in the last year or so, you've had a lot of volatility. Now, we do have a trend here, and we had narrow volatility in there, but it wasn't trending volatility. And these are all the differences that you have to understand. So the summer, the last 3 months now, has been difficult trading environment because of a lack of trend. But it's also been difficult in the last few weeks because of a lot of volatility where you move up, you move down, you move up, you move down. It's hard to make money when you don't get a trend. You end up getting whipsawed out of your position. So the S&P 500 is in a bullish trend longer term, but in the medium term, it really has no trend. And there's been a pickup in volatility in the last month or so. Moving on to the Russell 2000, you actually have a better trend here with less volatility inside that trend. It's been trending up in general, so the small caps are doing better than the large caps. We're coming into resistance, however, and the market will likely get stuck there. A little bit more upside still, probably another, say, 2% upside until it hits that level, but we are getting close to that upside resistance. On the TSX, we had a pretty good week through the start of the week on strength in oil. Then at the end of the week, we actually sold off into the close in the last hour or so. Not too much of a surprise because look what happened. It was hitting the resistance from a month ago, basically hit that exactly. That's where sellers are going to come out. So I would call this a neutral chart, even though we were fairly strong in the last week. With that resistance that the TSX is hitting, looks to me like we go sideways in the near term. On the longer term chart, the TSX is trending higher. It's in a narrow trading range. Just needs to break through this little ceiling for it to continue up into that range before it gets back to the highs of 2015. All right, so right now I would call this neutral to slightly bullish because the trend is up, but it needs to break through here to really get bullish again. On the TSX Venture, we had this strong upward trend, and since that time we've gone into a little bit of a pennant pattern. Now the trend into the pennant was up, which makes the likely breakout of the pennant to also be up. So watch for a breakout to the upside of that pattern, which is what likely will happen. If we get a breakdown out of the pattern, that's a negative. Right now, I would call this a neutral to slightly optimistic chart. Keep an eye on it. Gold price is going to be quite important to that. We'll talk about gold in a moment. On the U.S. Treasuries, we had the breakdown there, but still in this longer term upward trend, basically came back to the trend line. We've risen up to this trading range here and then started to roll over at the end of last week. I think, again, the market looking toward a raise of interest rates soon in the U.S., and we're slowly building this pessimism. I think we could see this break down here. That means bond price going down, interest rates going up, and obviously very focused on what happens with the US Fed. US dollar is in a little pennant pattern as well. See this compressing volatility? That means investors are getting more confident. We just need to see a break out of this range one way or the other. If the market thinks interest rates are going up, I think it's more likely that the US dollar breaks to the upside. And even though the trend is down into this pennant, that's what I lean toward having happen because the market is so focused on a raise of interest rates. However, hasn't happened yet. So watch for the break. If you see that break, you should expect that the US dollar will start to move up into this zone here where there's longer term resistance. On the gold side, what I find interesting is that each little peak here is lower than the previous one. So we've got these falling tops that have been building. We haven't really broken down through support in a major way, but each time the buyers are in control and they push price up, like in these instances here, each time they have a little less power. And the result is that you get these falling tops. So that's a show that pessimism is slowly building. Now the longer term chart still in an upward trend, but really testing the lower boundary of that. And so you want to watch for a breakdown through that floor. If that happens, that will be bearish for gold. Now oil had a pretty good little week here because it broke that negative cycle that I had been talking about in recent weeks. It broke this downward trend line, short-term downward trend line, mind you, but it did manage to break that, risen up to here where we expect it to stall. Of course, that came on news that OPEC intends to do some production freezes. If we can break through this one, well then next stop is here, break through that one, next stop is here, and then here. So it is slowly building some optimism. I wouldn't call this a bullish chart yet, but it is looking better than it looked last week when we were actually consolidating down towards support and looking like we might break down toward this floor. So better chart for oil this week, and some of the oil stocks have started to look better again. Fear at a pretty low level again, and basically showing the market complacent. We're getting through the month of September. Everyone thought, oh, we're going to see a big sell-off. The Fed's going to raise rates. We have a U.S. election, which is a little bit crazy going on. A lot of people thought the market was going to correct, and the bulls have defended the market very well, even though they're not particularly strong. They have held back the advances of the bears. So while the bulls have not been strong, they are defending the market well. Oil fought back this week, and it may hold that short-term optimism that has been slowly building. Investors also slowly losing interest in gold. Not a big deal yet, but I want you to be cautious with gold and gold stocks because we could get a breakdown on those soon. Fear back down to lower levels, but don't get complacent. The market still has work to do. We're still neutral on everything that I'm looking at. We're in these sideways ranges. We're building a base, but is that a base for the market to launch upwards off of or possibly to move downwards through? All right, let's look at this week's trade of the week. One of my favorite things to do is look for what I call action candles. On the StockScores market scan, you have the ability to scan for stocks making statistically significant price moves with statistically significant volume. When I see that happening, it's often a sign that the market is beginning to speculate on some big fundamental change. So here's the interesting one with AEGR. It started to do that abnormal behavior back on the 20th of September. Pattern into that was what we call an ascending triangle. I didn't draw that very well, but you get the idea. There you see the abnormal activity, and the market moved up nicely. Here was the news. The news came out on after the 28th at the close, and basically the news was, we've had a drug accepted for use in Japan, and the market had a gap up. I call this an exhaustion gap. We had a trend up into the gap that was up, and therefore probably going to come back and fill in that gap. The trade, as a swing trade, was to buy the stock when it started to behave abnormally back there and be a seller up in here when the market priced in the news. It's the old buy on rumor right there, sell on news right there. Well, that has been the StockScores Market Minutes for October 3rd, 2016. Have a great week in the market and trade well.